Very good afternoon to all of you. I, CA Jyoti Sabramadan, will help you in the numerical questions of financial management. The first numerical question is on cash flows. Just to find out the basic cash flows from the given information. Please have a look. The first information we have given the cost of capital, a cost of assets, what we are having at 1 lakh rupees, right? The second installation charges we are given as 10,000 rupees. A scrap value we have given that is a 20,000 and the life of an asset is 5 years. Next point is working capital is given in the information. The next information is like we are investing in the work, we are definitely generating something that is in the form of a cash inflows. Right? What are the inflows are given? We are given the 5 years that is 1, 2, 3, 4, 5 and in the different years we are getting a different cash flows. The first flow is 30,000, 70,000, 40,000, 50,000 and 40,000. Now we have to find out what exactly are cash flows. Now, first we find out the initial cash outflow, what we are actually putting in our business. For that we have to find out the cost of capital plus installation charges, whatever is there in the business, and then we add on the working capital. Right? Now we will solve this question. What we have to add it is equals to, we put the formula, what we have to add is the cost of assets plus your installation charges of 10,000 plus your working capital that is 30,000. That means the total cash outflow will be 1,40,000. Got it? Now the second point what we have to calculate the depreciation on the cost of assets. The depreciation will be calculated with the help of the formula that is cost of assets plus installation charges and whatever the scrap value will be deducted from that amount and then divide that with the life of the assets. Now we calculate it with the help of the formula. But again, whenever we start the formula, we start it with the help of is equals to, with the function is equals to the cost of asset that is 1 lakh plus the installation charges is 10,000, right? Minus your scrap value that is 20,000. As we have to divide it, to put it in a bracket. Bracket close and then you have to open it also. And then you have to divide this value with your life of your assets that is 5 years. We get the depreciation amount of 18,000 rupees, right? Now what we have to calculate? We have to calculate the cash flows after the tax. What will be the cash flows that we have to pay after the tax? So what information we have given? We have given the year and the cash flow before depreciation and tax. What information we have given? Cash flows before depreciation and tax, right? We just copy the question, put it in the year in the solution part. This we have done. Year 30,000, 40,000 we have given up. Just making it in a different way. Now what we have to do? We have to put the depreciation which we have just calculated. That is 18,000. Enter it and then remember this we have copied from there. Just make it block that cell. You have to block that cell with the help of alter function F4. Your function F4 key will make it block. The second option will be that you can block this cell with the help of this one, put in Excel and you can use it in a dollar way. Put the function as a dollar. Alter all and dollar. Right? Put it in that. You can do in different ways also. The first way is the best one. Just putting Excel again. This is our Excel. Just enter it and this is your 18,000. Just copy it. If you drag it in the simple way, definitely they will show you an error. Why so? Because you didn't block that cell. You have to block the cell of 18,000. Okay, remember this thing. You have to block the cell with 18,000 and for that you have to do function F4. The key will be function F4. Then it will be blocked out. Otherwise, see the changes. It's showing dollar. That means the cell is blocked. Then you put it enter over there and then you just drag the cell from here. All you can do is copy and then drag it and paste. There can be multiple options. But the main point is you have to put the depreciation, right? The next step is you calculate first cash flow before depreciation and tax. This will be your depreciation part. my profit? Yes. Then what we have to do? Subtract the depreciation. Very good. And then income. This is your 12,000. That is profit before tax. Right? Again simple. Drag it from here or just you can copy, Control C and then you can copy it. That means this is the cash flows before tax. Different years you have the different cash flows, right? Now we can what to do? We have to calculate the profit after tax. For that what we have to do? We have to deduct the taxation amount, right? How we calculate the taxation? This is my profit before tax multiplied by after tax means that means after deducting the tax, right? That means multiply bracket 1 minus the tax percentage is given in the question where it is written C. It is written tax rate of 30%. 30%, right? Now coming up back again, close the cell and enter. Right? What you get it? 84,000 is your value. Then what you have to do? Grab the value of this 84,000 and then close it. Doing it again. See, please have a look. A cursor sign will also come up. You just have to drag that values or other simply just copy it and then put it Control V. This will be your profit before tax. This will be your profit after tax. Right? Now the third point and the last point for this question, what we have to do? We have to calculate the cash flows after tax. Remember, we always have to calculate the profit after tax, but cash flows after tax means after considering. First we deducted the depreciation, but depreciation will be finally added on with this value because the depreciation is not a cash flows item, it is a non-cash item. So what we have to do? Put it profit after tax, add the value of depreciation that is 18,000 and then enter, and again you just have to copy and drag it and then you have to paste it. Very simple and easy. So what we have added, we get a profit after tax. Hope you remember this thing. Hope you getting the value how we are calculating it. Please have a look on this again. We have given a cash flow before depreciation and tax. That's a different values. Depreciation we have calculated. Profit before tax means calculated after depreciation. From 30,000 we deducted our depreciation value, that is profit before tax. After that we calculated the after tax value, means from 12,000 we deducted the tax element and we taken a tax element of 30%. That is given in the question, right? Then after tax we have deducted the value, we calculate the cash flow after tax, that means profit after tax and add on the depreciation value. This will be your figure. But for the last year, like inflows of the last year, when we calculate the last year item, again whatever the scrap value we have done and the working capital, we have to add on that value, right? We have to add on that value. So for that we have to calculate it this way. This way is equals to take the last year value plus your scrap value. What is the scrap value which we have done it over there is 20,000 plus working capital, right? Enter it and you will get your value. So this will be a one topic that shows you inflows of the last year, right? This is one of the questions which we have done on the cash flow. Hope it is clear. Okay. Now coming up to the next question, when we have to calculate the payment, that is a payback period when there is a constant cash flow. Students, what happens? Sometimes we are given a data, like we are given a cash outflow, what we are investing. Like in this question, we are investing these 3 liabilities, right? And in the different years, that is up to different years, we are getting something money in return. Like in the 1 year, we are getting 120,000, and in the second year, the same amount, third year. This is one of the category we decided on that the inflows are same. Now, I as an entrepreneur or a businessman want to know in how many years I am getting back my money. Like I invested rupees 3 lakh for the 5 years. In how many years I am getting back my money? In how many years I am getting back my money? For that, we calculate the payment, that is payback period. What is that? Payback period. How many years I am getting my money back, right? But for that, we have to will show you in this question also. Like for example, the cash outflow in this will be, again we can calculate like over here, is equals to, that is 3 lakh rupees plus your installation charges and plus your working capital. Enter it, that will be 3 lakh rupees. But if I put some question in a different way, like 10,000 more, just put 1,000, it will be added. This is the quality of the Excel. One figure gets changed, your answer will automatically get changed. Okay, so and again in this way, I'm just deleting over here and continue the same question. Now we have to calculate the payback period. In how many years my investment is coming back, right? For that, what we have, the initial cash outflow, what the amount of money is going on, and what is the expected cash inflows, and what amount of money we are getting per annum. Right? How we calculate this? See, is equals to what I am investing 3 lakh rupees, right? Divided by what I am getting is 1,20,000 per annum, right? I just do one thing over here. See, comma 2. Please have a look. We divided cash outflows, divided by the cash outflows, comma 2, and I just put 1 to year to be come up, right? So what I do? Inverted stars and the and. I just put it and over here. So it is easy visible to you, and then I have this and year, Y-E-A-R, and inverted comma close, right? And then I just put it enter. I can do it in bulk also. There is some error showing on. See, I can doing it and putting in a round off also, so that the figure will be round off. It's a very easy thing. Cash outflow, what I am getting investing it, divided by your inflows, what we are getting it. The inflows are 1,20,000, right? Comma 2 and inverted comma start your year and then close, right? And my bracket close and then enter. See, it is showing, what is showing? Have a look on this from here. Round of G12, that G12 will be your outflow. E6 your inflow, that is 120,000. Okay, there is a one mistake. I am doing the bracket after that. So that means we have to put bracket after 2, right? After 2. See, please have a look. Round G12 E6 comma 2 and then close the bracket. This is the mistake we are doing over here. Please have a look once again. Is equals to round R-O-U-N-D, bracket open, right? Your 3 lakh rupees, that is outflow, divided by what you are getting, 1,20,000, that you are getting it, comma 2, then bracket close, right? Hope you remember, then and, right? Then you have to write it and with your keys. You can easily use a keyboard. Okay. Now putting and over here and inverted comma start your year and then bracket your year close and then end. See in how many years I am getting my money back. That is in 2.5 years I will get my money back. This is the quality of your Excel. With the help of Excel, we can easily get the things of the year in how many years my money will be get. Okay. See if I change any of the data over here, like example, second example is I change your figure to 4 lakh over here. My example can be 4 lakh, your answer will be changed, that is in 33.3 years I will get my money back. So this is the way we can change the data, right? Now coming up to the next question, what happened? My cash inflows are not same. I am investing rupees 4 lakh, but my inflows are not same. First year I am getting 80,000, second year is 120, and so on, different years. Then how we calculate this? So again, we will do it in this question also. The first point is always the same, that means the initial cash outflow. First we have to form the initial cash outflow. In the same way, how we have calculated? Taking the cost of capital again of 4 lakh rupees plus your installation amount plus your working capital, right? You have to add all that and that will be calculated a 4 lakh. Or we can do the same question also, like we can get it a 3 lakh. year inflows in this. Now we have to calculate the second topic, that is the cumulative cash flow. What I am getting. So in here is equals to, in the first year I am getting 80,000, right? Enter it. In the second year, what we are getting? This 80,000 plus 1,20,000. Then enter it. And same we have to do it, Control C, Shift, and then Control V, or you can drag it also. Right? This is the way we were getting the cumulative cash flows. How we have done? In the first year we are getting 80,000. In the second year we are getting 120. In the same way we have done the cumulative. Right? So now what we have to do? We have to understand a few things in this question. Please remember the formula for the payback period, that is a payback period. When the inflows are not same, what we have to do? We have to need some items like N. N here means in how many number of years I am able to get the minimum amount which I invested. Like in this question, how much amount we have invested? 3 lakh rupees, right? 3 lakh. In the first year, how much amount we have getting? 80,000. In the cumulative, please have a look. 80,000. Then 2 lakh. Then 3 lakh 40. Oh, that is 3 lakh. But here I got it is 3 lakh 40,000. That means till the 3 years, I am getting more than what I have invested. So that means in the second year, till second year, what I get it? I get it nearby 2 lakh rupees. Till second year, right? What will be the next point which I needed over here? Please have a look. I. How much investment? How much investment I am able to get it till that year. Then CCM, that is a cumulative amount, and then CM, that will be the next amount, next cash inflows in the next point. Okay, in the next year. Now coming back and putting this in the formula, please have a look. Like what we have invested till now, we invested 3 lakh rupees, right? And what we are getting it, we invested 3 lakh. In first year 80,000, 2 lakh, that means 2 lakh 80,000. That means in the second year, till second year, I am getting what I invested. Putting the values over here. What do we do over here? See how much amount we have inflows. We get it 2 lakh. Right? So that was my investment. That means, or you can do it, understand in this way also. Like putting here what we have invested. We have invested 3 lakh rupees. Right? In how many years? Till 2 years we get it 2 lakh rupees. Cumulative of 2 lakh. We will do it like equals to this 2 years, because in 2 years I get this. How much amount till 2 years I got it? We got it till 2 years we got it 2 lakh rupees, right? Just putting the values. And in the next year, after 2, how much amount I will get it? 1,40,000. So this CCM plus 1 will be 1,40,000. Right? Now putting all this, the values in the formula. Putting the same formula, what the formula is this one. Payback period N. I'm just putting this formula over here for your easyability. See what the formula is N. 1 plus CCN is I in the street. What we have invested. Okay. Putting the formula again and put over here only so that you can easily get the answer. In how many years? That is in 2. We selected 2, right? Plus bracket open. How much we have actually invested? We invested 3 lakh rupees minus till 2 years. How much amount we got it? That's a 2 lakh rupees we got it. So we can put it from the formula also. Close the bracket, right? Divide by CCN plus 1, that is 1,40,000. Just enter it and see. That means in 22 years I will get my money back. Now it is coming in accounting. Please you have to select from here. Okay, and if you want this value to be coming in years, then we have to do the same formula, bracket, right, and right again afterward. Remember it, initial, years, and then initial close. Hope you getting it? Chalo. Now we are coming to the third point. That's a very important in today's scenario. Everyone is very much excited to know that if I'm investing the money in some business, what will be the internal rate of return which I'm getting it? पैसा लगाया, कितने साल में रहा है और परसेंट पे पैसा कमाना. Second point. Okay. So said in this question, we have invested amount of rupees 4 lakh. Right. What will be the installation charges I have taken in here? Again, you can take it as a 0 also or 100 also. Scrap value I have taken in, life is same, that's a 5 year. And the working capital I have taken in bill, but we can change the figure. Because same point is there, that is initial outflow, putting the same formula. What is the formula? Hope you remember now. The formula is cost of assets, whatever we invested, installation, extra expenses, working capital, day-to-day activity what we have done. Right? Okay. Putting that in the formula, again same, is equals to this cost of assets plus installation plus working capital. You always use the formula properly so that if there is any change, that change will be done and the answer will be get in a proper way. Okay. Enter. This is your 4 lakh rupees. Getting it. Okay. Now what we have given the question that in this year, what I invested 4 lakh rupees and how much I am getting it? 18,000, 120, 130, 120 and 160. In different years, I am getting a different sort of money. Right? Now, copy this question. Just love to copy it. Put it in your form, in your solution part. Right? Now what I have to calculate? Internal rate of return. See, I am calculating over here. Is equals to IRR bracket open. Select these values and bracket close and just enter. That means in how many years I am getting my money back? That will be IRR. I am doing it again. Just select all the values and then close it and you will get the answer. Okay, it is selected from journal. Please select it in a number. There is some error, might be some errors always show up in Excel. Sometimes it happens in Excel. Don't worry in that way. Ma'am answer को आया नहीं है. This doesn't matter. Please have a look once again. IRR bracket open. Select the values. Okay, just one mistake again. Please hold on. This happens sometimes. What happens? We have to insert one column and put over here the outflow. What the amount of money has invested. And what we have invested over here, just select is equals to 4 lakh rupees we invested, right? Now put the values over here. I'm just deleting this. Okay, now calculate. Is equals to IRR bracket and then select. And remember, if you are investing 4 lakh rupees, that means $4 lakh, then you have to show in the minus sign. Otherwise, it indicates that you are getting money back, but we are not getting. We are actually investing 4 lakh rupees. Right? Now it will be done. Now it's 4 lakh also. No, 1 is here. Okay. Now it is done, right? And put it as a minus. Minus sign should be there. Okay? That's. Now put is equals to IRR bracket open and then select all the values, bracket close and see the answer. See, sometimes some mistake happen. Don't worry with that. Try it again and you will definitely get your answer. But don't worry with the problems. Problems is always there in the life. Don't worry with that. Okay. Now see IRR, that is internal rate of return. I invested in this project 4 lakh rupees. Getting the money in this way, that means the internal rate of return. How much return I am getting it? That means nearby 14.42% I am getting from this project. Done. Now the point is this. A next topic, that's again a very important topic running in a day-to-day work. That is your NPV, net present value. Now what I am investing, that's okay. commission part. Right. Now what we have to calculate, ma'am, this 80,000 will be after 1 year. After 1 year, 80,000 remains, not 80,000, it will be decreasing. Right. So how we calculate this value? How we have to calculate it? Again, there is a different method. I will show you more than one method over here. First method is equals to, we are calculating NPV. So first of all, we calculate the present value of your cash inflow. How we calculate it? Net present value, bracket, consider an inflation rate of 15%, comma, your all inflows. Your all inflows. Right? Bracket close and then just put enter. This is your present value of cash inflows. What is this? This is present value of cash inflows. That means whatever you are getting after 4-5 years, the total amount of that will be 3,93,938. But if in a general person will add this value, how much value will come up? Just add this value and you will get 6,10,000. 6,10,000. If 6,10,000 is the correct answer, the answer will be 2. The answer to the correct is, that is 3,93,938 is the correct answer. That will be a present value. Now what we have to calculate? We have to calculate the net present value. How we calculate the net present value? Again simple. What we are getting inflows minus what we have invested outflows and just put enter. You will get the minus answer. That means in this project you are not getting a good remark. You are getting the negative value. So please consider it properly and then invest in this project. Hope you get it. We have calculated two most important things over here. That is your internal rate of return and second is your net present value. They both are very important while taking a decision of capital budgeting. You should focus more in detail about all these things. Right? Now the point is, now if I take this 15% a capital investment or a discount rate, if there is a change in that percent, then yes, you can see it. This is a 15%, I just change it to 10% and see the figure was changed. So that means when we are taking an inflation factor or discounting factor of 10%, this project is beneficial for you. Then you have to see the different rate, which rate will be more beneficial for you. Hope it is clear. Yes, remember one more thing. When I am calculating the IRR in this question, say, I am just calculating IRR for example. IRR, I am calculating IRR is equals to, remember before calculating IRR, just enter, put your one figure over here, one cell, just to put down over here 0. That means what you are investing? You are investing 4 lakh. Right? 4 lakh. I am just taking a 4 lakh. Now for calculating IRR, I am just doing over here IRR, right, is equals to, what we have to do? IRR, bracket open and select all the values. Select all the values. I have written IRR 2-3 times, just remember this IRR and select all the values, close it and see the resolution. That means in this project your internal rate is 14% and what you are taking a discounting rate of only 10%. That's why it's showing a benefit for you. See, if I'm changing it to 15% now, 15%, right? See the changes. Getting a negative. Now I'm doing it as a 14. What will be the answer? Yes, it should be 0. It should be nearby 0. Because if I'm taking inflation 40 and 40, that is always the same. So we get it in this way also. Okay. Now we have done NPV, we have done IRR, right? Now we have the third category, with different categories of capital budgeting, and that category will be called as the profitability index. In the profitability index, we have given a different questions again, how we calculate it. Like we calculate with the help of the formula. The main formula of profitability index is present value of cash inflows divided by the present value of cash We have taken installation charges nil, scrap we have taken nil, for working capital we have taken nil. But we have given a different inflows. I have taken the same figure just to make it recall. Right? Discounting factor I have taken a 15%. Now when we have to calculate the profitability index. How we calculate? Cost of capital, initial cost of capital is 4 lakh plus installation charges and plus the working capital. The total will be 4 lakh. That this will be initial outflow. But we have to calculate the inflows. Like what we are getting inflow, and that could be present value of cash. Put it over here, right? Put it over here. Now we have to calculate the present value of cash inflow. How we calculate? Is equals to NPV, bracket open, what the rate we have taken 15%, comma, what is the inflow, select all the things, and then close and enter. This is your figure. Now what we have to calculate? We have to calculate the profitability index. How we calculate? Present value of cash inflows divided by present value of cash outflow is equals to, this is my inflow value divided by my outflow value, that is 4 lakh, enter it and get the answer. That means for this organization, present value, that is the profitability index of this question is 0.984. Hope it is clear again? Okay. Now coming into the next point, we have done IRR, we have done PI, we have done NPV. Now, for today's session, one more important topic is there, that is earning per share. As we all invested in the business and we all want to know about the what will be the earning per share of that company. How we calculate this? With the help of this example, I will make it more easy. Right? We have given two cases. I have taken two cases for you. In the first case, we have given a number of equity shares of 25,000, and in the second, we have taken equity shares of 12,500. The second point is the rate of equity share. One share is rupees 100, and the second one is of $100. The both are in dollar. Okay. Now we have given an equity that is 25 lakh, and it's in 12 lakhs of $50,000. Debenture, that is a debt part, I have taken nil in this case, and in this case I have taken 12 lakh 50,000. That means in two cases. In the first case, I have taken any money from the debt element, and in the second case, I have taken 50% from equity and 50% from the debt element. Right? We have given an interest rate for the debenture is 15%, and the tax rate is given 30%. Right? Now I have to calculate the earning per share of that company. What we have given, the most important thing we have given, that is EPS. Remember, EPS is EBIT is earning before interest and tax. So we have given earning before interest and tax is equals to, that is 2,50,000. Just I pop it up. Then we have to deduct the interest element, what I am getting it, minus EBIT, what we are getting. How much in debenture I have taken? No, ma'am, I haven't taken any debenture. Therefore, there will be no interest in this element. But in the second case, if I am talking about the second case, is there EBIT? Yes. How much EBIT? The same amount is there. But I have taken the amount from the debenture. That means I have to pay the interest element. How much interest I have to pay? This 1,50,000. And how much interest is there? 15%. That means 1,87,500 I have to pay. So my earning. Then we have to calculate EBT, earning before tax. How it is calculated is equals to EBT minus your debtor. Enter. Same point you have to copy it. Control C and put it over there, or you can drag that. Right? Now you have to pay the tax in that. How we calculate the tax element? Whatever earning before tax is there, and what have considered tax rate of 30%. Right? This will be my tax value, that is 75,000. Control C, put it over there. This will be, you get the tax element. How we calculate is equals to this point multiply by your tax element, that is 30%, and you get. Right? But after tax we needed profit before tax, and then we have to calculate profit after tax. How we calculate? This value minus your tax element. Just enter it, drag Control C, drag it and put it in this. Okay. This is how we calculate the earning after tax. This is the amount which the equity shareholder received after paying the interest and after paying the tax element to the debenture, to the equity shareholder. Now what we are getting? 1,75,000 in the first case and 43,750 in the second case. But in the first case, what amount of equity shares we have? 25,000. Number of equity shares is 25,000. And in the second case, we have 12,500. Now putting all these values and we get the EPS. And how is? We have another is equals to earning after tax divided by your number of shares, that is 25,000, and just put an enter. See, you get your answer. See, it's so easy. It's very easy. That means in the first case, the equity shareholder, the earning per share for the equity shareholder is $7, and in the second case is 3.50. This is the way how we calculate the earning per share. And hope you remember the formula, that is earning after tax divided by number of equity shares. Is it important how to calculate the EPS? Yes, it's very important. You should know what is the earning per share of your company. If you want to change the data, like in this example only, what I am doing, you can also do with me. Like what I am doing, I am just taking the figure from 2,50,000 and just going over here at 20. Please help me, right? And here I am just what I am doing, I am getting it is a 50,000 or 5. Whatever we are changing it, see the answer getting changed by the code. Because the figure can be changed. But you have to make it properly understood. Is all the figures being put it properly or not? If it is done, then only you get the answer in the best way. Otherwise, it creates an error. This is the way, just continue from all the things, how we have done it. In the initial stage, in the starting, what we have to calculate. In the first step, we have to calculate the cash flows. What will be the cash flows that a person or a businessman will get? Right. In the second, we determine what will be the payback period, how much amount I am getting it when I am investing. In two cases, the first case we are having a constant amount, 1,20,000, 1,20,000, and in the third case, that is the second case, when we are not having the same amount. See, we are having a different amount. Right. The third practical we have done today is calculating the internal rate of return, what we are getting it when I am investing some amount of money. Next, we have done NPV, that is the net present value. What will be the after impact of inflows and outflows. And the last, we have done the profitability index. What will be the inflow divided by the outflow. And the last topic of today's session, what we have done today is calculating the earning per share of the company. What will be the EPS of the company that is available with the shareholder. Hope it is easy for you and you are able to understand it. With this, I will stop for this session and we will proceed further with the different practical example of financial management and with the help of